Good evening and welcome to Follow the Money, bringing you the latest updates on everything finance, business, the markets, and investment funds. Our top story this week: Wall Street banks reported healthier deal pipelines and increased investment banking activity in their quarterly earnings. However, they also highlighted some challenges and reasons for concern. The results from Citigroup, JP Morgan, and Wells Fargo have kicked off the second quarter earnings season. Mergers and acquisition hit 1.6 trillion globally in the first half of the year, up 20% from last year, while equities market volumes climbed 10%. Citigroup reported a 60% jump in investment banking revenue to $853 million. JP Morgan saw a 50% increase in fees, higher than expected. Wells Fargo's revenue surged 38% to $430 million. Despite these gains, shares for all three banks saw slight declines due to various concerns about cost and provisions. Citigroup CFO Mark Mason is optimistic about the pipeline of deals for the end of the year and into 2025. JP Morgan CFO Jeremy Burnham noted robust M&A dialogue but fewer actual deals, while Wells Fargo CFO Mike Santomassimo highlighted strong activity in investment-grade debt and capital markets. A report from Moody's suggests U.S. banks will see significant improvements in investment banking revenue despite slightly lower IPOs than last year. Looking ahead, Goldman Sachs and Morgan Stanley will report their quarterly results next week, with both expected to show significant gains in earnings. Goldman Sachs is expected to more than double its earnings compared to the second quarter of 2023. Morgan Stanley's EPS is anticipated to climb 33%, driven by increased mergers, acquisition, and capital market activities. Also on Follow the Money, this week the equities market soared to a record-breaking all-time highs. Investors saw significant gains across major indices, driven by strong corporate earnings and positive economic data. The S&P 500 closed at 4,500 points, up 3% for the week, while the Nasdaq reached 15,000 points, marking a 4% increase. Dow Jones also hit a new peak, closing at 35,000 points, up 2.5%. Analysts attribute this surge to better than expected earning reports and optimistic economic forecasts. Tech giants like Apple and Microsoft led the charge, with Apple reporting a 20% increase in quarterly revenue and Microsoft posting a 15% rise. Additionally, the healthcare sector showed strong performance, with companies like Pfizer and Johnson & Johnson exceeding earnings expectations. Despite concerns over inflation and potential interest rate hikes, investor sentiment remains bullish. The Federal Reserve's latest comments on maintaining supportive monetary policies have also contributed to the market's positive outlook. That's all for Follow the Money this week. Thank you for joining us. Join us again next week in the latest updates in the world of money. Back over to the studio for Trade of the Day.